Crypto just broke a major level. Bitcoin under 70,000. This is not a normal dip. This feels like a full market reset. Billions are leaving. Leverage is getting wiped. Institutions are stepping back. So the real question is this a crash or the biggest opportunity of 2026? Let's break it down. First, liquidity is drying up. Crypto used to move on hype. Now it moves on macro. Inflation is still sticky. The economy is still strong. Jobs are hot. Manufacturing is strong. And that means interest rates stay higher for longer. When money gets expensive, risk assets get sold. Tech stocks drop. Crypto follows. Bitcoin is not acting like digital gold in this cycle. It's trading like a high-risk tech stock. And when rates stay high, speculation gets punished. Now add the shock factor. The market is pricing in a new Federal Reserve direction. Kevin Warsh, a known hawk. No easy money, no cheap liquidity, no endless stimulus. Every crypto bull run in history was fueled by loose policy. Now traders are asking, what if that era is over? Fear spreads fast. Next, institutions. Spot Bitcoin ETFs were supposed to be the permanent bid, the unstoppable demand. Now they've turned into exit doors, hundreds of millions flowing out in days. That's not retail panic, that's big money stepping aside. When institutions de-risk, the market loses support. Price drops faster, volatility spikes, confidence disappears. But the silent killer was the basis trade collapse. Hedge funds were farming easy yield between spot and futures. Those returns are gone, so they unwind. And unwinding means selling, aggressive selling, forced selling. Even if fundamentals don't change, price falls. Then we have regulation. No clear rules in the US yet. Delays in legislation. New uncertainty in Europe. Institutions hate uncertainty, so capital waits. And waiting means lower prices. Now the technical damage. Bitcoin lost the 200-day moving average. That's a line institutions watch. When that breaks, algorithms sell. Leverage gets liquidated. Stop losses trigger. It becomes a cascade. Longs wiped out. Over-leveraged traders gone. Open interest collapsing. This is what a reset looks like. Sentiment confirms it. Extreme fear. Single digits. That's where people stop buying and start capitulating. Historically, that's also where bottoms begin. But timing it is dangerous. Fear can stay extreme longer than you expect. Now let's talk price impact. Bitcoin is roughly 50% down from its peak, near 126,000. Altcoins are bleeding harder. Liquidity is thin. Every bounce gets sold. Until macro changes, rallies may not last. So what does this mean for investors? First, this is a liquidity market now. Watch interest rates. Watch the dollar. Watch bond yields. Second, watch ETF flows. They are the new heartbeat of Bitcoin. Inflows, price support, outflows, pressure. Third, leverage is being flushed out. Painful short term, healthy long term. Every major bull run started after a brutal deleveraging. Fourth, this cycle will be selective. Strong assets survive. Weak projects disappear. This is a quality filter phase. So is this a crash or an opportunity? The best buying periods in history felt exactly like this. Extreme fear. Institutional doubt, technical breakdowns, media calling the end. But this time, there is no guaranteed easy money. That means recovery could be slower, more volatile, more unpredictable. Here's the key scenario. If liquidity tightens more, Bitcoin could test lower support. If ETF outflows continue, downside remains. But if inflation cools, if rate expectations drop, if institutions return, the rebound could be violent because after forced selling ends, supply dries up fast, and crypto moves up when no one is positioned for it. Right now, the market is asking one thing. Is this the end of the cycle or the reset before the next explosion? And the answer depends on one word, liquidity. So the real question is, are you waiting for confirmation or accumulating while fear is at its peak?